Alright guys, welcome back to episode 3 of the prop firm series. We've already covered how to pass the evaluation in episode 1 and how to keep the account alive and build a buffer in episode 2. Now comes the fun part, right? Actually getting consistent payouts. Most traders never get there, to be honest. They pass, maybe they build a buffer, but then they blow the account, or they go for like one big payout and reset back to zero. I'm going to show you how to avoid that, basically how to pull steady $1,000, $2,000 monthly payment payouts at least, and how to reinvest those profits into more accounts with a trade copier so you can compound and scale your income. Okay. Now, before I get started, I do want to say that it's important that when you get the account and you build your buffer, you don't withdraw all the way back to your buffer to like 50K, let's say, because then you will lose the account. Right. So after the buffer, that's where the fun part begins. Every prop firm pays differently, basically, and knowing the rules is step one, right? Let's say for Apex, the first withdrawals are allowed after 10 trading days, I'm pretty sure. Early withdrawals are capped. First cycle might only allow like 1 to 3K. After that, it's basically like bi-weekly payouts with a 90-10 split, and you must stay above your trillion drawdown to stay funded, right? That's like with everything. Top step requires 5 winning days before a first payout. The profit starts at 50-50 and then it scales up as you stay consistent. It encourages kind of steady growth and not like one-hit wonders. My funded futures is bi-weekly payouts once conditions are met. They have a pretty high percentage split, like 90-10 or 80-20, and they're still tied obviously to that trailing or fixed drawdown rules, right? The big lesson here is you can't just cash out whenever you want. You have to hit the minimum days, keep equity above drawdown, respect consistency rules, and most of all, keep your mind cool, right? And that is why episode 2, building a buffer, is so critical. Without that cushion, you can't safely withdraw, right? So let's talk numbers real quick. Too many traders aim for like 5, 10K payouts and blow their account chasing that dream, right? That's not sustainable. A realistic target on, let's say, a 50K funded account is, let's say, $1,000 or $2,000 per month. That's still good. That's still profit, right? And that's about like a 2 to 4% monthly return. Now, the goal isn't to get big with it. The goal is consistency again. So it's well within safe drawdown limit. At 1 to 2K a month, you're not stressing the rules. You're trading well within normal market opportunity. And here's the kicker, right? 1 to 2K a month consistently is better than 5K once and then blowing up and then your mental gets damaged and shit like that, right? So funded trading is about repeatability. Okay, when you're aiming for payouts, risk has to be even tighter than during evaluation or buffer building. Okay, your risk per trade should be around 0.25 to 0.5%. On a 50K account, that's like a $250 risk. Small, controlled, and kind of like an uptrend. Right? You want it to go like this. You don't want that big spike ruining your whole progress. When it comes to daily stop loss, I usually go for half the firm's limit maximum in a day. If they allow, let's say, $1,000 a day, you cut yourself off at halfway there, and that's the maximum. Right? That's like a really bad day. Win rate plus RR with like 1 to 2 R trades, and a 60 to 70% win rate somewhere around there. A handful of trade a week is more than enough. You don't need to trade daily. 1 to 3 high quality trades per week can hit your $500 to $1,000 bi-weekly goal. 2 trades a week at, let's say, $250 risk, averaging, let's say, a 1 to 0.5 R, is still $750 on the week. That's more than some people do at their jobs. That's still a good income to start with, right? That's $1,500 for the payout cycle, which is 2 weeks. And it's right in that 1 to 2K month range, right? With some days being worse than others. So you have to kind of think in 2 week cycles when you're trying to structure your payout cycles, right? So most firms pay bi-weekly. Week one usually kind of focus on safe growth. You get green early. You lock small profits in. You don't force anything on week two. You can protect your profits. Continue trading only A plus setups. If you're ahead of goal, you can size down even further. And at the end of your cycle, that's when you request your payout, but you leave a bit of cushion as well. For example, let's say you're up 3 bands and the trailing drawdown is 2,500. Don't withdraw all the 3K, right? Take like 1,500, 2K, leave a bit of buffer in the account. That way, you can keep trading without risking a violation, right? That makes sense. This is where payouts turn into like a real scalable income, because take your first 1 to 2K payout and buy another eval or 2 other evals or 3 other evals and pass it with the same conservative approach again. Now on the evals you can go a little bit heavier, right? But then you're gonna slowly size down until you get to that point where you're at right now again, right? And then you connect accounts to a trade copier. A trade copier lets you mirror your trades across multiple accounts at once. So your risk stays the same per account, but your profits will multiply. Okay. For example, 150K account pays around, let's say, $1,500 a month, right? We're being real conservative here. 3 will be 45. and 5 accounts pay $7,500 a month. That's really, really good. And again, that's super conservative numbers. Okay. And since you're only risking small account or small amounts per account, you're not exposing yourself to more downside. You're just cloning your edge across more capital, right? This is the true like prop firm compounding strategy, right? This is how you need to be kind of thinking about prop firms. How you need to make money with them, because their goal at the end of the day, the prop firms, is to make money, and the goal for you is to kind of take money from them. Right? So you kind of have to outsmart them. The biggest challenge, honestly, is psychological, not technical. Okay, so don't get greedy. Stick to your 1 to 2K a month target, and trust me, you'll make a really, really good income soon enough. Protect your buffer. Never withdraw everything. Always leave equity in the account so you can trade with no stress. And you need to detach yourself from the payout. And I always say detach yourself from the numbers. If you keep sticking to the numbers on the screen, that's the dollar amount, you're going to get stressed. You're going to be emotional. You're going to want to react to it. You can put tick values if you want. You can put percentage. But you need to detach yourself from thinking about the payout. Treat it like a paycheck, right? Not lottery winnings. Kind of like don't expect to get paid as well. You need to kind of like work for it, obviously. But hey, that's a part of the game, right? And also, you need to play the long game. You want steady withdrawals for months, years, even, not one big score, and then you're kind of left there wondering what happened, and you think you're in a trading slump. Remember, the firms are betting that you'll break their rules or overtrade. Your edge is being boring, consistent, and professional. That's literally all it is. You show up, you do what you got to do, and then that's how you get time freedom. And you can go on about your day. So the roadmap is simple. Learn to pay out rules of your firm. Aim for 1 to 2K a month, not 10K jackpots. Keep your risk small, protect your profits, always leave a buffer when withdrawing, and reinvest your payouts into more accounts. Use a trade copier, compound it. That is how you turn prop firm trading into a reliable income stream. So this basically wraps up the 3-part series, guys: how to pass, how to grow, or how to keep the account and build a buffer, and how to get consistent payouts. Now you have the complete playbook when it comes to prop firms. It's not about getting lucky. It's about playing the game the smart way. If you like the video, please like, comment, subscribe, and catch you guys in peace.